Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the General Manager of HomeGain. A reminder that we are here to answer any of your real estate questions, whether it's regarding credit, whether it's regards to finding a mortgage, obtaining a mortgage, or being denied a mortgage and trying to figure out, what you can do to set yourself up to be able to get one in the future, whether it's, you're behind on your mortgage payments, you're trying to figure out what the best option is. Instead of burying your head in the sand, you want to be proactive, potentially reach out to us. We can let you know, if a short sale may be the best bet for you. But at all costs, try to avoid foreclosure. The off-air phone number is 877-245-2030. That's 877-245-2030. That's the off-air phone number, or you can reach us via the web at realestate360live.com. That's realestate360live.com. On the right-hand side, there's an Ask a Question button. Just ask your question in there, put your contact information, and we'll get back to you as soon as possible. Before we get to your questions, I wanted to give you guys this week's credit tip of the week, which was brought to you by the Credit Pros. Many people, and this is from Damon Discrescenzo, he says that, married couples should not co-sign on debts unless they have to. He says that they have, you guys, married couples in general, have a great opportunity that single people do not, and that's that they can manage two independent credit reports and a two set of credit scores in one household. Now, this would allow them to use one riskier transaction, maybe a real estate investment, business credit card, while keeping one clean credit report to be used when transactions are safer. So in essence, what he's saying is that, if there's something, could be a risky business venture or a real estate thing, you don't want to ruin two people's credit. So if you have two people's credit available, only use one. Now, the tricky part to that is that sometimes the one person's income might not justify them being able to obtain, a home loan or a business loan or whatever that may be. But it's just a bad idea to have, both people sign jointly on every single debt. He says it's just a good way to, and I kind of do something similar, Louis. What I do is I'll put like car loans in my wife's name, but I don't have any car loans in my name. And I try to spread it out so that I can try to keep it so that there's not too many accounts in one person's names versus the other. So I do a similar thing, but I do think that this is a great idea, especially if there's a household that has dual incomes that could potentially be used to buy more real estate. Because if it's not a joint debt, then they potentially only have to count the one mortgage on one person, but then not on the other. So if they want to go out,
in your experience, what about what do the lenders think about a married couple and don't they generally want both to sign?
No. Here's the thing: if one of the people within that married couple can qualify on their own, there's nothing preventing them from doing that. Now, what they might say, is it just you that wants to go on the loan, or do you want it to be you and your wife? Typically, the consumer will answer, "Oh, well, I'll put my wife on there too," right? They just say that just because it's easy. They're asking the question because they're filling out the application that way. But if the consumer is educated, goes into this as an educated process, then they might say, "You know what? I just want to apply for this on my own." Now, they have to know that they have to be able to have the income to support that. Now, if it's like, let's say, one person's just a stay-at-home mom or dad and the other person's working, then chances are it's not going to work to have that person that's not working go ask for that loan on their own. Does that make sense?
It also doesn't make sense for it doesn't really add any benefit to the lender to add that person to the loan either.
Absolutely not. But in a situation where there is dual incomes, both people in that marriage make good money, it makes sense to be able to buy one property in one person's name, buy another property in another person's name. It keeps the debt to income ratios better because you're not having to double count it against them. Especially in today's market,
a lot of count it half though, Brian. If you do co-sign a loan, I guess you're on the hook for the whole thing, not half of it.
Yeah, the whole thing. Because you're married, I mean, it's a whole debt. So one way or the other, they're going to count it against both of you, the full thing. We've had a lot of people that we've done business with over a period of time, over the last 5-10 years, that have taken this approach because they're in the business to try to buy as much real estate as possible, and this is just one of the ways that they can do that.
If you're polygamous, you have an even better shot.
You have a much better shot. You might be able to own 10, 15 houses at that point.
One for each husband or wife, right?
Yeah, and I mean, the biggest thing is, guys, we're trying to help you take advantage of the potential opportunities in the market. We know it's tough out there. Mortgages are hard to obtain. They're getting tougher and tougher by the day. But, there are people out there that might, benefit from this piece of information. And if you have any further questions about credit, what you can do to get yourself straightened out, to get your credit scores higher, we can give you plenty of tips. The phone number is 877-245-2030. Or like I said, visit the website at realestate360live.com. I want to jump into a couple questions from listeners that we've had over the last few weeks. One of the questions was from Melissa. She said, I just got out of school and have obtained a good-paying job in basically the same field that I was in school for. How long do I have to be at that current job in order for me to be able to buy a home? Now, that's kind of a tough one, Melissa, because technically, as long as you're getting a job in the same field, like you're a business economics person and you got a business job, right? It's technically the same field. They can technically count your time that you were in school as part of the employment, as consistent employment history. So even if you've only been at that new job and it's a salary job, let's not say it's like hourly or anything like that, but if it's a salary job, you could potentially be able to buy a home right away. Okay? Now, there's a caveat to that because there's different types of loans. You have, conventional loans, FHA loans, and VA loans. All of them have a different set of guidelines. But what I would suggest is, reach out to a lender. If you'd like, reach out to me, and I can put you in contact with a great lender that we work with that can look at your overall situation, find out your schooling, find out where you're at now, and actually get them to give you some sort of automated underwriting decision or contact an underwriter and find out specifically with what type of loan you're trying to obtain and what the specific guidelines are for that. But I would say that you have a good shot as long as your credit scores are somewhat solid. If you've established credit while you were in school, that might be one of the trickier things because you don't have necessarily any rental history or none that I'm aware of. If you just got out of school, you might have been renting at school. But there's a lot of small questions that probably need to be asked to find out more detail. And, it kind of goes without saying, Louis, a lot of people will throw out a scenario, right? And you'd like to just answer it yes or no. But unfortunately, where we're at today, the underwriter is going to be asking a million different questions to figure out if they want to actually lend that money to you or not. So it's almost like today it's more of an investigative process than anything else to obtain a home mortgage. I mean, you have to ask all these questions. Sometimes they may seem absurd, and they might question every little deposit on your bank statement, and you have to show proof of where that money came from. It can be tedious.
Ryan, it seems like they're trying to find a reason not to lend you the money.
Well, being in the mortgage real estate business for the last 10-plus years, I always thought that that the lender was in business to try to give out mortgage loans, right?
Right.
I feel like now they're in business to just keep their head above water and not lend out too many low interest rate loans, right? Like they want enough to make money, but they don't want too much exposure at these low interest rates because it just doesn't make good financial sense for them. I think that they're passing up good loan after good loan, especially when, we've talked, and you had actually emailed me the question, what about people that have $1 million in the bank and they can't get a $300,000 loan? They got 740 credit scores. They've got, assets in the bank. They've got retirement accounts, and they can't get money lent to them because the lender doesn't like what's reported on their tax returns. Well, your option is to pay cash, right? That's pretty much the only option. Or it's to put a significant enough of a down payment down to where your qualifying ratios from the amount of your adjusted gross income that's being reported on your tax returns is, at a certain level that underwriter will approve your loan. You asked the good question the other day, Lewis, about, well, can't they just pay cash and obtain a home equity line of credit later? Well, sure they can. But let's say they pay $400,000 for a house cash, and then all of a sudden they want to try to go and get 80% of that back out with a home equity line of credit. So then, you're talking about a $320,000 home equity line of credit. Once you go over probably $100,000, the banks are going to get very stringent on their guidelines, just like any other first mortgage would. So they're probably going to ask you for everything in the kitchen sink as far as your financials, and it's probably going to be looked at the same way. So there really isn't a good option out there. I mean, we have the need, and I think that one of my predictions for 2013, I do think that there's going to start to be some private money that enters the mortgage market. I don't know at what point, but I do feel that stated income loans, they're going to start to come back into the market because there's a need, there's a gap that needs to be filled. I've been talking with a lot of people, and they said that there's people that want to get involved, but there needs to be the appetite for it on Wall Street. There needs to be the end buyer. And I think that we'll probably steadily start to see that into 2013.
Well, there are people who may quit their jobs. They may have a few $1 million saved, and they want to get into this business. They see there's an opportunity, but now they have the problem. They don't have any income.
You got it. Yeah, I mean it's basically a problem every corner you turn.
I wish I had, Ryan.
It's a problem that I wish I had as well, and we're just here to try
to all this money, and I just can't get along.
Yeah, I mean, our job is to try to get creative for these people and help them get pointed in the right direction.
Like
oh yeah, plenty.
People who have a lot of cash, and poor them, they don't have income, but they still, they are good. I would lend money to them.
Absolutely, guys. We're coming up on the end of the show. Thank you, Lewis, for coming on.
Thank you, Ryan. Thank you, everyone. Happy New Year.
Happy New Year, everyone. Guys, have a great week. We'll be back again next Monday from 9 to 10. Have a great week, and call us if you have any questions, 877-245-2030. Take care.